Good morning, everyone. Welcome to another London session on TopstepTV. Are we bright-eyed and bushy-tailed? Not yet, but we will be after some caffeine. If you're here for the first time, welcome. My name is Deeyana Angelo, aka Market Stalker Dee. Now, before we carry on, let me see whether everybody can hear me, everybody can see me. All right. Yes, so I do have an intro screen while I get ready, just to make sure that everything's going out. So don't freak out. It's just my little Bob the Chameleon intro, so all is good. All right, let's have a look at what's going on in the markets. And by the way, I've been trading for about 18 years, in case you don't quite know much about me. And I'd like to specialize in some of the more unusual products, such as Bruno. Bruno is sending me some funny pictures here, our lovely moderator. Yeah, I specialize in things like copper, DAX, which, yes, we don't have yet on Topstep. We are working on it. Hopefully we'll get it at some point this year. But yeah, you will see me probably do copper, platinum, gasoline futures, and like I said, some of the products that are not that well represented. Therefore, if you're asking me to analyze NQ, please don't. I don't even pay for it on my live. So much for that. All right, let's carry on. Let's see who we have in the chat. Obviously, everything you hear on this channel is for educational purposes only, so do not try to replicate accounts because we all have different sizes of accounts, we all have different goals, different styles. However, what you can do is to take little bits from every single coach that we have here and see whether it works for you. Every time you're trying something new, don't just plow into your XFAs and start changing things. Always do it in a safe environment. Start with a practice account, go into a combine account, get a proof of concept, and then maybe we can talk about funded accounts. However, the biggest problem that we see as coaches, as traders ourselves, is that people are trading in an unsustainable way. So we've been trying to beat the old size down, slow down, size down, slow down, and we still have people who are not doing that and then going, I blew my XFA, boo. It's like, yeah, how long were you in a combine? 2 days. That might be a problem. It could be a problem. If you can't stay in a combine long enough to actually get any sort of an idea of how your current approach performs over time, you've got no business being in a funded account. I'm sorry, but your longevity in a funded account is going to be the same as the longevity in a combine. You might have a couple of good days, but then you're going to run into a complete disaster. So please, let's be a little bit more sensible about things. I don't know how many ways and how many times we can actually say this to people, but if you cannot control your downside very well, it's going to be a problem and you won't particularly be, successful. Now, just as, how would I say it? A beacon of how you should be trading. I tend to run different combines for this London class because this is more of a class. Like I said, I don't really have one of the products that I really love trading for London and where the moves are more appropriate for this time of the day. Now, copper can be a decent replacement, but it can still be a little bit fickle on some days. Today we have jolts later on, and right now the London session started off a little bit lackluster. So yesterday I did manage to get the day back and managed to make about just under 200 on this thing. Again, not sizing up. Looking for good trading locations, managing to stay in trades longer when it calls for. However, yesterday we did have... what just happened? I just had a whole bunch of stuff reset on me. We don't need that. Don't need this either. Hold on, let me just clean this up because it literally just reset on me. And why do I have bonds on my chart? That's very odd. All right, let's go back to copper here. And then micro copper, because you should be trading micros in general, especially on a 50K. But also in a new funded account. All right, so let me see who's in the chat. We have Arthur, we have G-Wiz, we have TJ. Yeah, I'm not going to try and read that. Otherwise, I will butcher your name, and I don't want to disrespect you by getting your name wrong. So if you don't mind, I'll just call you TJ. Alexander K. Frederick, Bryant. Okay, very good. Some new names here that I haven't really seen before. So welcome everybody. I know that somebody's saying, do you know if I can get support to lock my XFA to only 2 M&Q? Is that something that they can help with? Unfortunately, in an XFA, you don't have the flexibilities that you have in a live account with working directly with the risk team. Now, that's one of the huge benefits of having someone to watch your back when you are malfunctioning. But for now, we do not have trade limits on Topstep X. So it's not to say that they won't come at some point. This is a platform in development. And as you've seen, we have implemented some pretty awesome features like the lockout, custom lockout. So not only can you lock yourself out for a whole day, but also for specific periods of time of day, which I actually quite like recommending to people. If you go back through your performance, maybe not talking about the core analytics in the native Topstep X platform, but somewhere where you can actually have a look at hour by hour how you do in a day historically, that can actually be a very good indicator of what time of day you should be focusing on. Now, I know that many of you just love clicking buttons and you want to sit here for 8 hours. You see many of us who trade through multiple sessions and you're thinking, hey, I'm going to do all 3 sessions, right? Who needs sleep? Problem with that is that you will have a completely different expectancy for different times of day. But if you do some trading, for a month or so, then you go back and you go, okay, let me see what time of day do I suck and what time of day is actually pretty good for me. And this is where a lockout feature can help if you cannot keep your paws off the mouse, by basically locking yourself up until the time of day when you should be trading. But when it comes to the trade limits, absolutely, I agree with you, Brian, to 100% that position sizing is very important. Some people get themselves into, not some people, most people get themselves into a lot of trouble because one time they're in with 5 micros and then it doesn't go their way, then they plow in at 10 because they're like, F it, right? You get that attitude, and it's not really an attitude. It's not really, people say it's a discipline problem. It's not a discipline problem. It's actually a fight or flight problem where your brain goes, I need to survive. I need to survive right now. What do I do? What do I do? What do I do? Size up, get out of the hole. And that's when trouble starts. So, yeah. And we have asked our lovely CEO, Mike Patak, to push things forward with the trade limits as well. So I do believe they're working on it because I've seen him post on Twitter and stuff. So I know that they will be coming. But for now, for the time being, the only way that you can lock in your position size is literally by just deciding that it's your maximum position size and do not touch anything else, right? So you just go to 2 and that's it, right? Forget that all of the other buttons exist, okay? Forget that the scale in button exists. I actually use something similar on NinjaTrader that allows me to lock my position sizes. And what I do, because I trade multiple products, I like to lock them to overall 6 contracts. And then that way, if I'm in with 2 minis on one, 2 minis on another, 2 minis on another, it won't allow me to scale past that. However, I don't really have much of a problem of being inconsistent with sizing. Once I decide, and you can make this a part of your plan as well, to externalize it and to make it super clear in your head of what is your maximum default position size, rather than just sitting down and going, oh, I think I'm gonna go in with 3 right now. Oh, actually I lost a couple, so now I'm gonna go down to 1. Now, I had a trader, actually she was one of my first traders many moons ago. This was like 2015, 2016. We actually met through some colleagues, and she was just starting a prop trading job. She was struggling, and she asked me to sort of mentor her and to show her how I do things. Now, here's what she was doing. She would be saying like this: "Okay, I'm in three minis. There were no micros back then. I'm in three minis. Oh shit, I lost that. Let me try again." And again. And then when it came to that fourth trade of the day, she would size down to 1, so going from 3 minis to 1, and it would get the full target. And then she goes, and I'm like, oh, excellent. So you pull yourself out of a hole. Because she caught like a massive runner of like 5R. And she's like, no, actually that didn't cover, I mean, it just covered, like, you know, I'm still a little under. And I'm like, how can the math ain't mathing, man? What's going on there? And she goes, oh no, I sized down. I'm like, oh, okay. And I'm like, yeah, this is the problem with sizing down. I also had somebody in the VIP asking me something to the opposite side. Maybe they can trade micros, and then when they get like a buffer of about 400 or 500, maybe they can go up to a mini and then kind of carry on. And I said, great idea, but in practice, but in reality, what you're going to be doing is so much effort to get to like 300, 400, 500 on the day on micros, and then that one mini trade that you try is very likely going to affect you emotionally, which is the primary reason why people blow up. It's not, the system. Give the same system to 100 different people, you're going to get 100 different results. It's just how it is. Everybody trades from their own sort of self-limiting beliefs and money beliefs and life experiences and all of that good stuff, but yeah, and the problem with going micros and then minis, basically sizing up towards the end of your day, is that the emotions are going to be higher. So therefore you won't be able to manage the trade in the same way, and therefore very likely the outcome is not going to be positive. So you're going to be working super hard and you're going to be super disciplined, and then by the end of your day, when your mental capital is exhausted, when you're just totally knackered from being in a trade that really just pushed your buttons and took forever, but you still got like 300-400 in profit, and then you whack in a mini at the end of the day, you lose the plot, and then you're back at square one. So what did you do? Is that getting there faster? See, I have this tattoo on my arm that says haste makes waste. And I tattooed that because that is something that I live by. If you rush, you create rubbish. That's it. So any attempt at rushing the process and getting there quicker or doing something stupid that is going to completely derail your mindset is not going to get you there quicker. It's actually going to be much slower, because you're going to be doing 2 steps forward, or 1 step forward, 2 steps back, 1 step forward, 2 steps back. So stay consistent. Brian, that's an excellent question. So it's a really, really important thing to make sure that your sizing is consistent. Okay? Consistent. Brian is also asking me, when are the 150k subscriber classes? I signed up for you. Oh, thank you, Brian. I'm very pleased to hear that. We're going to be starting them 21st of April, because obviously everybody's got different schedules, and we also needed to make sure that we can do 3 weeks of those classes, so we've all just kind of filled in our schedules. So all of the classes are going to be running from April 21st, and we all have a designated time and day that will be the same. And it's going to run once per week for 3 weeks. Each of us is going to be doing a class on mindset. Then the next one is going to be risk management, and the final one will be technical analysis of our choice. Obviously, we're all specialists in different types of things, and I figured I would probably want to do something about the day types and the setups that I take, because I have some proprietary setups that are not a core part of the They're not a core part of market profile. They're actually something that I came up with. So I have like my own twists. I call it like an evolved profile, where I figured out statistically that while the day type can, for example, be a normal variation date, there's a point of the exhaustion that I also use in my trading that I can use for something called the auction fade. Again, the auction fade you will not find in any Dalton's books. It is a term that I coined. And my own mentor, Hogue, he actually started seeing the value in that. So even he would be going, when somebody goes, oh, Hogue, is this a failed auction? But we've had a huge extension of the initial balance to one side. He goes, I think Dee would probably more call it an auction fade. And I was like, oh my God. And, it's so nice to see some of the ideas that I've had kicking around in my head take on their own life and, go out into the world and get rent and start lives of their own. All right. Anyways, back to the markets, right? So let's have a look at this copper. Metals have been interesting. Yesterday I was struggling, and whilst, like, full transparency, whilst my combine did pretty well, I just mismanaged my live account completely, and I kept mistiming things. Like, I had the direction right on copper. I was trying to short it, but I kept doing it at the wrong time. So I need to just figure out some things mechanistically to see whether maybe my stops weren't appropriate for the volatility that we have at the moment. And I think that might be a part of the problem. So I typically like to use about a 35 tick stop, but I do see that the volatility has expanded. And at the moment, we're kind of coming down this morning and through Asia. But yesterday, when I kind of looked at the what the ranges were doing, it actually showed me that I should be using a 25-point stop. Now that's a little bit wide, right? It's a little bit wide, but it is what the market potentially calls for. I can see that this morning we've kind of come down to some normality. So we are sitting at about 19-point stop loss default size. And again, I have my ways of figuring out how to get to that number. You can use ATR, you can divide ASR, which is my preferred method. And my way of figuring out whether the volatility of the product is matching my stop. So I kind of try and stay consistent. And because I've been so used to trading copper on 35 ticks, I'm like, nah, it's fine. However, yesterday it made me kind of question my reality and meaning of life. Now, just joking. I like to joke a lot. Okay, so whilst I'm a very serious person, I grew up with a comedian dad, so I like to crack jokes, so it is what it is. Anyways, what do we have levels wise? So overnight, in my own account, I actually did run a little long in copper, and that ended up giving me 2.5 R, which is pretty nice to wake up to. I don't really like trading overnight much because usually I can't sleep. But last night I couldn't sleep anyways because I am actually finally moving a house. I've been in this house for like 20 years. And we finally bought a new place and we're moving out to the countryside. So I was a little bit excited, And if you were watching the coda for the slow markets class, you might have seen me pop in there. Just say hi to everyone. We had a hilarious moment of Coach Hoop posting a random link on YouTube, and Dakota being a quick, nifty guy like he is, he promptly clicked on it and then realized that maybe he shouldn't be clicking on a link, and then Hoop is like, don't click, wrong link. It was nothing naughty. It was just something like travel insurance or something, but I thought it was very funny. So that kind of made me relax a little bit, and I managed to get to sleep right after. So yeah, it was 2 a.m. my time, so very, very late. So I didn't get too much sleep today. I am very aware of that. Then maybe today my level of energy is not going to last 8 hours, 9 hours, 10 hours, but maybe I should schedule some breaks. Very important, right? Mindset is everything. And if you're knackered, if you can't think straight, that's going to affect you. All right. So copper is opening above value with a mild imbalance. So that is actually a pretty decent thing for any kind of continuation upside. in light of the open sentiment. So I call the open above value, open below value, I call that the open sentiment, right? Literally just where are we today in relation to where we were yesterday for the London session. When I look at the options activity, I can see that we're struggling around this HVL. What's an HVL? It's a gamma exposure area where we might either slow down or kick up momentum. So it's basically something that market makers might be looking at in order to shift the gamma for the day. So whether we're negative gamma or positive gamma, that will dictate how volatile we are. So obviously, if this price action if the price cannot break 510, I would actually expect to see some more lackluster moves. But if we manage to sustain a notable intraday time frame, like a 30 minutes above it, I wouldn't be surprised if we just kind of keep going higher. Yesterday, this huge spike down, look at it. Massive spike, spiky. Just so they can stab you in the P&L, right? You think we're going down? No, we're not. But yeah, it bounced off of the ballpark 5 evens, right? It overshot it. But the more important thing here is how we ended up the candle and then ultimately what we did after, right? And as you can see, that was the end. That was like the final nail in the coffin on the down move. We were bleeding down all day, slow bleed, not so slow. And then, a bit of a speed bump, more bleed, up to VWAP. So the VWAP yesterday, because obviously we move it, but yesterday the VWAP was literally somewhere around here where this London value high says it is. And again, I mismanaged that one as well. I don't know how I managed to do that. Like sometimes you have these like Muppet moments and I'm like, really? You missed that one? Really? And, we need to be kind to ourselves, yes. But sometimes and the thing is, I was also looking at it. I'm like, okay, short from VWAP, and it got there. And I don't know whether it happened too quickly, whether I just wasn't really reacting to it. And not to be making any sort of excuses, but I do suffer from brain fog every so often. Brain fog? Ribbit. I have this like chronic illness nonsense that plagues my life most days. But basically sometimes I'm trying to do something and the brain just ain't listening, right? And I'm sure that even if you don't have a chronic illness, if you're a newer trader, you will have those moments of malfunctioning. But yesterday, I just, I couldn't believe that I just missed that. So again, I was like, oh, I missed it. Maybe I should try going in. And then I got smacked in the face because the stop loss and the trade location went away from me. So yeah, that's what Dee was doing yesterday in her live. But basically, once this shakeout happened, it kind of made me think that 5 evens for now is probably the floor, right? And today, as you can see, we do have some levels down there that are pretty big, of big significance. GX1, they're pretty big. Put support and average daily range exhaustion low. So those are my exhaustion areas. But today, interestingly, at 499, we actually have 2 very important levels lining up. So if I was going to not be an intraday trader and just go, you know what, I'm just going to wait for hours on end and then maybe snipe this to the long side, that would be the most ideal thing. But we're pretty far out. We're very, very far away from that. So obviously as an intraday trader, you would hope to find a trade way ahead of that. So one of the levels that I was also looking at is sort of ballpark zone around 507. Why? Because we have the London value high from yesterday, where we already had a bit of a reaction pre-market. So that can be an indication that this level is of interest to institutional participants. So if you have a level where nobody has ever gotten involved and we don't have any, any obvious reversals, price action, swing extreme. To me, that's always like, are you trying to be a psychic? Should we get your crystal ball or something? I always find it interesting that people don't look for evidence of previous price action around that area. And I come from the swing trading for the first 5 years of my life. No, my career back from 2007. And one of the things that you look for as a swing trader is to get involved in these like really strong trade locations that can handle the big moves and can actually make the move last more than 3.5 seconds. So that's key. And when you're an intraday trader looking for bigger chunks of the move, you have to look for something similar, right? And if I was going to analyze this as, a quality zone, it's not that high quality, but if we assume that this is one big uptrend and that whatever was happening on the daily chart was just like a little shakeout, maybe ahead of NFP, maybe, liquidation to the end of the month to rebalance the books or something, and that all of this is just another preparation for these tariffs, the T-Day, as Dakota coined it yesterday. Maybe we are, maybe we're done with the shorts, and that 5.0 is now the new low that we can reference, and therefore maybe from this daily time frame we go back up to 522. It is entirely possible. All of this to me would now be more of a bit of a pullback. It's not really a range anymore because we made a new lower low. But still, we keep trying to push higher. And it's been super resilient, apart from like last week, end of the month, kind of played its part. But, it just really surprises me at the resilience of copper. I know we have gold, which is bonkers. That's like another story altogether. I mean, what even do you do with gold? We're sitting at value high. Couldn't break VWAP to the upside. But do you still want, like, if you're going to long gold, like this would probably be not a bad zone to do it. The only problem I have with gold is that you need like a 65 tick stop. I don't want to use a 65 tick stop. It's like, no, F off. So yeah. So if we assume that this is going to be, another sort of shakeout, what sort of hypos, this is what I think about, it's very important, what sort of hypos would I want to see? So one of the hypos, if we assume the uptrend and the floor at 5 evens, would be maybe a failed auction from this GEX4 and London value high area. So basically smash through VWAP and then reclaim it, touching this area. And we have some price action here to justify it, because on an intraday time frame, this was the low, right? Pre-market, we made a little demand area. We already did the shakeout, which I call the Frankie fake out. Oh no, I'm not going to break into a freestyle, don't worry. But yeah, we had the Asia high. London opens and it goes smash, and then and then we're kind of back in here, still inside the initial balance. Other time frame participants nowhere to be seen. So we want to first and foremost wait for that extension. Who's we? The wizards. I mean me. I want to wait for the initial balance to be extended before I do anything, right? Because I always feel that when I'm trading inside the initial balance, that is always more difficult. It's sluggish. It's a little bit directionless. And it's like, come on, just do something. Just do something. So unless it's been like, 4 or 5 hours into the session, I'm a little bit not happy trading inside the initial balance. So one of my rules states that for most times, I need to have that extension of the initial balance in order to get involved. Now, I'm a systematic trader, so if I go, I'm just going to go in, because I think it's like, Dee, stop thinking and use previous analysis. And then I say to myself, stay away from the initial balance. You don't do very well in the initial balance. And then I go, oh yeah, that's right, I suck during the initial balance. And if we're still inside it. So we're going to wait for that, okay? We're going to wait until this is extended. Now, that's going to give me a couple of things to work on. First of all, if we go higher and extend higher, it might be that we actually get a VWAP that pulls back up into the initial balance and then gives me a setup called the strength inside initial balance, aka SEEB, okay? Hugo says, are you funded? Yes, I've had my live account, honey, since December 2023. So yes, I am funded, but like I said, when we started London session, I was doing this because they were like, oh yeah, we're going to get DAX, and that's what I trade, right? Now, usually if I'm going to be trading the New York session, I trade RBOB and I trade really late in the day. Now, you have seen me, if you look at the main broadcast on Thursdays, every so often I will do an RBOB trade on my live account, right? So, shock horror, right? But this is a class. Now, first of all, I don't have my main product. I don't have DAX. I do have copper. And sometimes, yes, I will trade copper early, but I'm not going to be getting involved in suspicious trades just for clicks and likes because you want me to. I couldn't care what some, person on the internet wants me to do. And they're like, we need you to see you trade on the live. No, you don't. Like, why? Do you want me to take subpar setups? Do you want me to get into a drawdown? Do you want to see me suck with trading setups that I'm not supposed to be in on because the stream is running at a time of day when the market decided it's not going to give me my setup? Is that what you want? If yes, please go elsewhere. Like, I really don't have time for this. Anyways, let's continue. So yes, funded with an account that's lasted longer than some of you have been trading. Okay. Sunita says, ma'am, where can we learn all these concepts for trading? So my own concept is the market stalkers method, and it's been created by me for many years. Now, when I was working in prop, people used to come up to me and go, how did you go into that trade? How did you go into the trade? And then, like 12 people later, when I was explaining it over and over and over and over and over and over, I decided to put things on YouTube because I was like, this was 2015, a long time ago. And they go, okay, so now we've got this on YouTube. Let's find like a whole bunch of people who suddenly came to watch their video out of nowhere. I don't know where they came from. It was like an obscure video about supply and demand intraday and how I was approaching it and analyzing it. But yeah, it was just like so weird. And then I started getting wallpapered with questions. Where do I learn this? Just like Sunita is saying. Where do I learn this? How do I learn this? Do you have a book? Where do I buy your course? I'm like, I don't have a course. I don't have a book. I don't have anything. Oh my God. And then many years later, I kept getting wallpapered with questions. And then I decided that maybe, just maybe, I should create a properly structured thing. So not something where you get to a webinar and you just listen to someone waffle on for like a trading room where you just listen to people waffle on, which can be useful, but it's not structured and you only pick up like random bits and pieces of the methodology. So I set out back in like 2017, I set out on an 18-month journey to create a CPD certified course. So now I have that on my, like if you want to go to my channel, it's underneath this video, and literally below every single video on that channel, you will find the links. I don't want to talk more about it. It is there. I'm not going to push it because if you are interested in putting together my exhaustion zones profile, supply and demand and time of day, that's where you're going to find it. Okay, that is what I'm effectively talking about. You've seen me call ridiculous tops and bottoms using exhaustion zones, and like, let's just not talk about it anymore. If you are interested in the course, go there, do what you like. I will be happy to have you. But this channel here, Topstep, is not about me self-promoting and whatever. It's here to provide more education. I don't hide anything. Every single concept that I use, I've talked about. So, if you watch these enough, you could probably reverse engineer most of it. But yeah, if you want a more structured approach, that's what it's there for. And it's probably going to cut down the learning curve, because obviously I will introduce each concept. It's a part of the CPD certification. You have to introduce everything as if you were at a university. You can't just go, let's just open a training room and then waffle at you for about 4 hours. Yeah, it's not a very good way to learn. There's a reason why universities have structured lectures. And because I'm a systematic trader, and whoever is like in any sort of a systematized approach, we have a very good way of explaining to you exactly where we're going in, why, where the stop loss goes, like a whole bunch of other people, like Coach Jay and Coach Ray. Coach Vince as well. He's a profile trader. And profile is only a part of what I do. I have this like whole contextual thing. And then I have my proprietary things that I came up with, like the cue points and exhaustion zones, and just out of a need of what I needed as a trader. All right, so a little bit of movement here off the just this visible range POC, which, am I surprised that there's a intraday POC here? No. Still nothing, because we're still at this HVL. This, really needs to either break or do something, because right now we're just in one big range. A slight skew to the upside because of the 5 even defended, but still nothing much to do here. Are we waiting for something for today? It's jolts, but I mean, is there? Oh no, it's NFP week. So NFP weeks can be fickle beasts. They can be a little bit slow, or they can bring more unwinding of positions ahead of it. So it's not beyond the realm of possibility, because we had end of the month, that we're actually going to have a bit of a lackluster week up until NFP. So we also need to make sure that we are aware of what time of the month we're trading in. So yeah. What is the second volume indicator? If you think this vertical histogram, is that what you're referring to? M. McNeil? Mr. Ludery says, early morning roasting. Yeah, I love those. You can notice how short my fuse is in the morning for them. Oh, the blue and yellow. Yeah, it's the volume profile. So visible range volume profile. If you want to find it, here it is. Volume profile, visible range. Now, I like to use this over the fixed range because A, it just gives me, whatever the chart gives me. But be a little bit wary of it, because as you move, whatever candles you have on the chart, it's actually going to move. On my other platform, the one where I have my own indicators from my company, I actually have 4 weeks worth that is like fixed volume profile. Okay. Let's use this opportunity to analyze a bit of DAX. We do have some calls coming up. Or did we overshoot? Oh my God, it overshot them. Let me have a look. The London average session range high and also average daily range high are all the way up around 22,800. In this area that we just battled through, we actually have a whole bunch of levels. So price action is a little bit slower here. You can see it by the size of the candles. But we did go over 2266, which in the options is a small GEX level, but it overshot some of the projected ranges from the options activity. And there is a chance that it goes to its own HVL at 22,760, which would be more conducive to exhausting it to the upside, right? So we have an upward bias today. One thing that DAX loves to do is to kind of try and crawl up there, then it reverses, hits sort of VWAP inside the initial balance post extension, and then keeps going. So if I was going to say, what I want to do today with DAX, I want to look for a pullback into further longs from that VWAP area. Because I don't like, so one thing I hate doing is going into a trade that is away from value. So we're opening above value and then it goes into sustained auction. worst trades ever for me. They take donkey's years to come true, and I'm just like, ugh. One time when the sustained auction is useful, so this is sustained auction. You can see the red is the initial balance. Then we go into the extension. But the ones that I do like when they go into sustained auction is when we open above value and then go into a mean reversion towards the value. But this thing kind of going, it's sort of up in the air to me. So just, yeah, we're just going up. What? So, I hate doing sustained auctions in the directional market away from value. You can see that the value high actually reacted pretty well. If we go back, this is where it opened, touched value high, and carried on. I was still getting ready, so I was like having my third coffee at that point, which is why I'm talking so much. But yeah, value high, first choice for a long. VWAP after the extension in the same direction, second choice. If we go very far away, third choice will be initial balance high. So ballpark 630 as a joining of the sustained auction. But, just catching it like this, I hate breakouts at the best of days, at the best of times. So I'm going to sit and wait until DAX kind of sorts itself out a little bit. Because this is not, it's not one of my star setups, so no play there. But yeah, the second volume indicator is volume POC. Visible range, I like the fixed 4-week, but we don't quite have that yet. So, you can sort of make it into a 4-week fixed. It's just a little bit painful to me. I'm an older person. I look young, but I ain't. I'm not a kid. So some things, learning new stuff, I've got to be honest, it's gotten a bit more difficult. Mo says, Dee, would you like to buy my course, How to Lose Consistently and Keep Trying? Hey, you know what? That's not a bad idea. Because, persistence is something that maybe you can teach. Monetize everything. This is the influencer side of things, right? It's like, oh, how can I monetize every single thing that I'm doing? So it's not a bad idea. I know that it was a joke. But hey, how to stay, that would be a good YouTube video. How to not give up. How like never give up, never surrender, right? That's one of those. Maybe you have some tips that keep you going. You keep failing, but you keep dusting yourself off and keep trying. And honestly, guys, whoever's done anything in their life, we've failed many times. Like, you can't develop emotional resilience. Like, you can probably see that I'm a bit of a no-nonsense person, right? I am, I'm a small woman. I'm 5'1". I'm tiny. I'm like, not very loud. But people don't mess with me. Why? Because I've been through 3 wars by the time I was 20. I'm a trader. I was a musician, was a sax player and an electric guitarist, so a completely male-oriented environment. Clubs, bars, I've seen so many weird stuff happening and, shootings and growing up in Serbia in the 90s. And that is what your life experience can help you. It can help you. And I've failed in like many things in life, right? I've succeeded in many things as well. But the only reason why, like, let's say I became a session musician to a very high level, whilst everybody around me was telling me I was going to fail and how it's a very difficult career and that nobody really makes it and blah, blah, blah. I got to play with Rod Stewart, It's like my mom was going, no Serbian person ever has managed to run a successful session career abroad. So I was like, okay, cool. When I was a kid, I actually got into an Olympic team as a gymnast. not many people know this. If you're on my course, you would know this because I talk about it. But yeah, when I was about 5 years old, I was like, gymnastics is very popular in like Eastern European countries in general, and also the Southern Europe where I'm from. But yeah, they all told me, what do you want? And I was like, I'm going to be on the Olympic team. Like tiny little kid, like really, really miniature, sort of like where are her batteries sort of thing, a toy. I declared that I'm going to be in the Olympic team. And when I was 4 years old, I also declared that I was going to be a musician. Even though at the time, my sister was considered the talented one in the family, and I was just like, oh yeah, child, like don't get your hopes up. But then when I was 9, I actually got into the gymnastics Olympic team. Unfortunately, the country fell apart by the time I was supposed to be in it in 1996. Just gives you an idea how old Dee is. But yeah, so every time people told me this is impossible, I would be like, okay then, thank you for your opinion. I don't care. And I would keep going, right? So that's sort of an attitude of, I'm doing this regardless of what people around me are telling me. I kind of trained people around me to not step in my way, sort of thing, right? And I say it that way, it sounds horrible, but it's literally like people in your nearest environment, your spiritual environment is very important. And if you have 10 people around you just going, you can't do this, you're a dreamer, this is impossible, nobody's doing this, you're gambling, you're doing this, nobody's done this, nobody's done that. You have to find strength. Like if you really want to do something different in life and you're not very good at it immediately, like no one is, right? We all have to start somewhere. But if you kind of take the attitude that this is your life and yours alone, think about this. At the end of your life, like it's a bit grim. It's an exercise that we used to do in one of the firms that I was with. Imagine that you're at the end of your life, deathbed, right? Done. It's over. No more. Like you're literally dying. That's it. How would you regard your life? Would you be happy? Would you have regrets? Would you have regrets that you didn't try what you wanted because you didn't have the courage or because other people around you told you not to? Does that matter at that point when your life is over? It's a very deep question, I know that I joke a lot and stuff, but I've been through some very transformative life experiences, and that one really kind of helped me because I was faced with mortality as a very young person. We had civil wars throughout the 90s, so not many people know this as well. I mean, some people kind of might have figured it out because of my age and because I mentioned it. But there is something extremely insightful, I think would be the word, when you have a bomb that like flies over your head and smashes into the building that's like merely 50 meters away from your house, and you're like just like frozen because you think life is over. That's what happened to me, right? And then I had one of my colleague musicians, he didn't make it. We also had an editor that we knew who died. Like it was like horrendous stuff that completely minimizes any kind of minutia of everyday life that you can be concerned about. It's like, oh, boo-hoo, I lost a train. It's like, snap the F out of it, It's like, it's not life or death. And if you think it is, size down. Size down. Parrot D, reporting for duty. Size down, slow down. Size down, slow down. Size down, slow down. But yeah, so because of my life experiences, I tend to be a lot more resilient. And whenever somebody tells me, you can't do that, and I'm like, F off, I'm still doing it. And, I've had that attitude since I was like 5 years old, pretty much. But it really got amplified because of the experience that I went through as a effectively 15, 16, 17, 18, 19-year-old, right? Mo says it's unabashed optimism even at the face of certain defeat. But what is certain defeat? You know, what do they say? The only certainties in life are death and taxes, right? Is it certain that you failed today? Yes, but keep tweaking your strategy. Keep journaling. Keep sizing down. Keep reviewing your trade locations. Keep learning. This is an environment, a unique opportunity for an ever-evolving skill set, right? Skill set. Yeah. Trader Chamber, any thoughts on BTC? I don't really trade BTC. I think it's a bit of an interesting... who said it yesterday, actually? Somebody who trades it. They say, I wait for a pop and then I fade it. That could be an approach. I've really traded Bitcoin only as a sort of a long-term thing. I had one Bitcoin and one XRP back in 2017. And then I sold it. So both of them, I think Bitcoin was at 20,000 at that point, and I got in at like 4.5 because there was a demand on the weekly. So I got in naturally. That's how I do my longer-term positions. But just before COVID. And then it kind of shot up and I was like, meh. That wasn't the right decision. I thought 3 years was like an excellent way excellent time frame to hold the trade. Just shows you that I'm much more of a shorter term trader these days. So now, whenever I have long-term positions like Palantir that I got in at like $9 back in the day, I just do like maybe, some protective puts on the equities and stuff. I don't consider closing positions anymore. I'm going to keep them forever or until like I want to, drag all my investments down into like a pension or something. I don't know. But yeah, I manage, I do have a small sort of pension, but I'm planning to kind of ramp that up in the coming years because, I'm getting to that age now. Granny. Yeah. So, what am I doing here? Okay. Dee, do you recommend taking a platinum trade through the NY Open? Had a nice flush on platinum, but bailed before open yesterday. So you know what? Platinum is one of those products that actually has a pretty equal range. Now, here's how I decide whether to keep it or not. If you see the platinum trade that I did on my private account here, because I do like markers every time I do a trade. I find it's a lot easier. And then it kind of just shot up. So I was very happy that I just took 2R from that. And there is something about my 2R multiples, because it's a statistically projected measure. It's not like, I just pull it out of my behind and I do 2R. No, it's the fact that most trades that have like a movement in one direction, they will typically go for about 70 ticks in platinum before they turn around or stop or whatever. So here's the thing. Whenever I'm trying to decide whether to carry over a trade into COMEX or not, I look at the difference between the ranges between London and the COMEX session. And as you can see, it's not a massive difference here. Like 150... 155, 160. 160 ballpark for COMEX and 116 for London. And it's a short on London session. Crichton. Yes, hello. Do you want to come say hi to everybody? Come on. Oh, okay. This is Crichton. He's a very loud boy. So let's put him on my lap so he can be entertained. So if the difference is massive, like you have COMEX double the amount of London, or even like two, like a third, like massively over, and you will find that in between like Tokyo and let's say COMEX for certain products that are really inactive. So you can maybe hold the ones that don't have that much of a difference. If they do, don't hold it because it's dangerous. Why? Because you would need a bigger stop loss. You're presumably basing your stops on the amount of movement that you have during the session as a volatility measure. But then when you have a vast increase of that, what's going to happen? You're going to lose, right? So for me, platinum is not, like, it's kind of on the cusp, right? Sometimes if I feel that I have a great trade location and I'm working with a trend, I'm getting a kiss from Mr. Crichton over here. Thank you, Crichton. Very kind. But basically, if you are with the trend and you have an awesome trade location, then you might want to try holding it. But if you're doing like more sort of scalpy style, I don't know, that could also work because presumably your trades are not going to last that long, so you're not maybe exposed to the risk for long. But if you're trying to go counter trend, if you're trying to hold from London, just be very careful because London and COMEX frequently tend to have opposing directions, or one will be completely directionless and then the other one will be quite lively. So yeah, platinum for me, let's say we have a failed auction here now and then we kind of start moving upside and we get up to like 1% into this high. I would probably be okay to hold that type of a trade. But if I was up here and shorting it and it's like coming up to COMEX like right now, I'm like, ugh, I don't have enough room to keep this. So it's all about how much room your trade has, I suppose. You're a bit fidgety. What's going on? Do you want to go? Yeah? Go on. Go down. Okay, so do I use low volume nodes for entry? Only as a confluence. So the way I trade, let's get away from this micro Bitcoin. So the way I trade, I use, let's say, about 4 reference points, right? With some time of day involvement, a lot of time of day involvement. But, for example, I use value areas. Guys, you can't play now. No. So I use value areas, my exhaustion points, supply and demand from demand, my accent's going all weird, from larger time frames, looking for swing extremes if there are any. It's a contextual thing. And then options levels, right? So those have to align at a particular time of day because we have some statistical things and events that tend to happen over and over that you can fall back on as a part of your strategy. It's certainly a part of mine. But, I personally, that's my style, right? I am very data driven. If you're not data driven, maybe this is not very useful for you, or maybe it is, I don't know. But for me, I can't work without, like for example, I could never trade like Dakota. Like I can see all of the stuff that he sees, but I just need additional confluences in order for me to go, that is a definite setup that I've seen playing out 1,000 times, and that is a definite setup that I'm taking now. That's why you see me have such high confidence in my setups, because the way I do my setups is through flowcharts. That's how I learned. I don't just go, oh yeah, it's a high or a low. Well, I've shown this before, so God, I don't know which account I use for this. Let's hope it's this one. Let's. Now I've showed this. How I create my effectively how I create my idea of a setup, right? So it's not just, oh, it's breaking out, let's go in. I'm like, okay, what's the time of day? What condition do we have? Is initial bounce extended? If it's not, wait for the next day trading time zone. If it is extended, what is the distance to VWAP? If it is an extension, yes. And then I decide whether I'm going to fade the European close if there are some strong gamma levels around as well. If it's not more than 0.4%, then there's no trade. So that is how I must approach my own way of like setups and sanity. If I don't have that, I just lose myself, right? So I'm analytical, I'm systematic, and it's helped me massively to really recognize the setup when it is there. Now, obviously, you don't want to go down a rabbit hole where you have a million conditions. All of the stuff that I showed you, it only had about 3 conditions inside it, right? So, certain time of day, initial balance extended, and then we're away from VWAP by X amount, right, in order to fade it. So, if you have conditions, there's like 15, 20 conditions. Engineers do that a lot. I've had engineers who present me these hugely complex trading plans. They're like, I'll be testing this today. And I was like, good luck. It ain't going to work. It's like, how do you know? Because it's too much. It's like it's in the heat of the moment. You need to grasp the visual information in one go, not to have to read it through a novel before you actually figure out what you're trying to do. It's like the setup has been and gone, and it's over. So let's see some more questions. Sandar says, I'm new at trading. Could you make some time explaining the meaning of GEX, average session range low? It's confusing. Yeah, so I am probably not the best person to go for if you're a pure beginner, right? I would probably point you in the direction of Dakota because he's like more into like swing extremes, 3-bar reversals, a lot simpler. Now, because of the types of products that I trade, they are commodities and they are, again, a little bit more tricky than some of the others. So I need orientation points throughout the day in order to figure out exactly what they're trying to do. Obviously, sometimes it's easy. It just kind of goes, and like copper is generally easier. So for you, I really wouldn't go as far as using options levels immediately because you will just be way in over your head, right? If you're really new, like, and how new are we talking? Are we talking 1 week, 3 months, a year? It's very different points, right? But if you go, I've been trading for like, a year, that's one style. Maybe we can break all of this down, which I have done in the past. If you join this particular session frequently, I have days where I clean up the charts and then we start over. And then I spend literally like, usually on quiet days, like if it's a holiday day or something, I will spend time not trading, but literally going through the entire process. And then I spend the whole 90 minutes explaining how I set up my charts. I think I've done that within the last 2 weeks, actually. Didn't I? Someone remind me. But yeah, it's, it's a lot, but I would probably point you in the direction of first learning how to read price action. So learn candlestick patterns like bearish engulfing, consolidation, higher highs, higher lows, lower highs. Just looking at a basic market structure, whether something is trending or consolidating, reversing. Take a look at Wyckoff. Wyckoff is actually pretty good for basic market structures. Many people neglect the basic market structure. Wyckoff explains it as any trend, whether it's up or down, it is still going to have 4 phases of the movement. It's going to be accumulation, markup, distribution, and liquidation. Now, to a degree, that is exactly what we look for in supply and demand, only quite a bit more systematic because you kind of score the zones, you see how the price left it. But Wyckoff, just from the bird's eye overview, I can tell you, no, this is a markup, this is distribution, this is a liquidation, then we have another accumulation, another markup, like whether it's up or down, uptrend or downtrend, you will still have these phases. Learning to recognize them can be more effective than me kind of talking to you about an HVL that changes gamma exposure, and coming from somebody who's been trading for almost 20 years, okay? So, it's going to be very different. And some of us who have been trading this long, we do tend to have a bit of expert blindness. I for sure have it. But I know that I have it, and this is why I typically don't take on super new traders in my private coaching, because I don't think that I'm the right person for them, right? I think there's so much free information, TopstepTV being one of them, where you can actually find, although arguably Topstep is like a prop firm and all of us are, everybody who's on Topstep and is doing this for a living, we effectively have a lot of years experience. So we can also be a little bit too much for beginners. But yeah, so start from literally the very beginning. Market structures, candlestick patterns. Once you kind of get used to that, then you can start looking at support, resistance, supply and demand kind of thing. Then have a look at some moving averages to give you an extra idea of a trend. Then maybe you want to look at VWAP. It's like the moving average, but it's got a volume inside it. My areas of exhaustion and my option levels and distribution curves and stuff, I would say that's probably best left for an intermediate trader. Somebody who's been trading for a couple of years and has, maybe scratch results or something like that. So not terribly in the hole, but not terribly successful either. That's the time to kind of start adding things on. Or, couple of years into it, you can start with profile, get horribly confused, and then, spend 2 years trying to figure it out. And then 2 years later, you're like, that's what he meant. So, yeah. But yeah, I'm probably not the person to teach sheer beginners. I mean, I wish I was, but I think you need to start. I think you need to learn to walk before you run. Let's just put it that way. This is like pretty advanced stuff in the way that it's not rocket science, but it's a lot of information. And I just feel that if I start filling your head with the final end result, that is the result of like 20 years of doing this, that it's probably get a little bit too much and it's not going to stick properly. So what we want is to add onto our skill development one thing at a time, and not just cram it all up like right away, like all of it going like as if you're a computer and you just download it. If you ever watched an episode of Voyager, Star Trek Voyager with 7 of 9, by the way, I'm a huge geek, okay, total nerd, love all things Star Trek, borderline Trekkie, right? Borderline. So if you ever watched the episode of Star Trek Voyager where 7 of 9 tries to download a whole bunch of information into her head, and it's like, this will be more efficient. And then she starts coming up with like connecting the dots of events that have nothing to do with each other, and loses herself in quite outrageous plots that she's connected from random bits of data, and like literally turns into a conspiracy theorist. It's very funny, but you don't want to be in that situation. You don't want to cram so many things into your head that you start seeing things. Okay, so we must absolutely be mindful of that when we're doing skill development. Andrew says, sorry I asked this, but I think you missed it. When price gets to our area, what is a good way to qualify an entry? I struggle with this. Time and sales. No, okay. Time and sales, again, it's kind of more to see whether there's any larger players there. But so the way Dalton puts it, that price is just an advertising mechanism, right? And it is literally just a reflection of what already happens in volume and underlying orders, right? So, for example, one decent way that I found is helpful. Now, it depends what you're looking for. Obviously, you can look for a slower way to do it. It depends on what you're trading. What are you trading, Andrew? Are you trading NQ or something less, something more sensible? Bryant, what's time frame initial bounce? Always the first hour. Always the first hour. Yeah, Sandra says weeks. So yeah, just start slow. Start from the very beginning. And many free things on the internet, YouTube. You know, just look up market structure for beginners. Take a look at candlestick patterns for beginners. So, you know, that will be more useful to you than all of this stuff. Crichton as in Red Dwarf. That is correct, Mo. Well done. We also have Rimmer. So that is where those names came from. So we have. So I did it because I can go running through the park shouting, Rimmer, Crichton, get over here. Yeah. So yeah, Andrew, you're NQ. Man, okay, you're torturing me. All right, so for NQ, here's what is an interesting way to look at things. You know how Dakota uses 100 tick charts? So here's a little bit of a workaround to try and maybe not get totally wicked out. Hike and a she on a 2-minute chart with, you know how Muhammad uses his ribbon? Well, I use something similar, but this is something that I've used like if I'm taking the reversal challenge seriously, if anyone can even say those words, I will have a chart with something like this on one screen. I will have bookmap and another thing called like it's to do with like fibs and stuff and all that. But basically the gist of doing entries on NQ when it reaches your level would be to effectively smooth out the insanity of its price action on a lower time frame. So I prefer the 2-minute chart, and I want to see the price hanging with the high Kanashi candles above this ribbon. Whenever I'm trading NQ, so just full disclosure so you know where this is coming from, I actually use about 35 to 40 points on it. So I'm not going to be skimping with like 20 points, 15 points, 10 points. It's a full-on 140 tick stop on NQ. Okay, if I'm like approaching it very seriously and it's like a star setup, I'm going in. But because it annoys the hell out of me with the way it's like having a seizure constantly, I like to smooth out the price action a little bit on those, especially on those low time frames with the high Kanashi and the help of a ribbon. So try that. That's been pretty systematic for me personally. And you can even tell when you're wrong, because obviously if you are wrong, so we're going to go blah, blah, blah. And then if it flushes all the way down below the ribbon, so let's say you're trying to long, but it goes all the way down, and then you're like, oh, no, that's actually changed sentiment because we're below the 9 EMA, and we've also changed the color of high Kanashi, and then you can just make a decision based on that. This is what it looks like when it's turning trend. Now this is overnight, so obviously this is Asia. But let's go back in time. To yesterday. Here we go. So you will notice yesterday was a bit of a choppy day, but here we go. So this is the trend change here, right? So we kind of we're kind of chopping, but then it sort of jumps, goes up. Now be careful of market structure as well. So you still need to see it break the market structure. You can't just go, oh, yeah. And that way, even if you're looking at time and sales, you can kind of confirm that we're hanging above the market structure. So you had a range, we break upside, hold above the ribbon. And really, you know, if we're going to nitpick, the first entry here would be this one, because that's the only candle that's fully outside of the ribbon, if you're looking for a trending move. And then that gives you an entry to survive for a pretty long time, yeah, until the end of the day. So that's one way that I've approached NQ in particular. All right, let's go back to copper. So yeah, try to make it a little bit more systematic. Oh, we've extended the initial balance on copper. All right, let's watch it. Let's watch it. No, I don't want to move it. Let's see what happens at this London value low. Now for copper, I don't do that because it's it's copper. It's slower, right? Okay, so let's have a look at more questions. After all this time, do you ever trade a larger size than what you're comfortable with? Not if the account is not able to handle it. So wrecked, I will always trade the size on the account that is... I will always trade the size for the account that is appropriate for that. What am I trying to say? What the hell? I'm trying to say, if you have an account size of a certain buffer, that's what you trade. So I would never go, hey, I have a new account and I've just put in $5,000 in there for no reason. I'm gonna trade 5 lots, 5 minis on there. I would never do that, right? So I'm like, okay, I have a sizing tool. I have a certain percentage per trade that I aim for. So I would say no, not at this point. The only time I would trade larger is if we're post-settlement and I'm seeing still some movement that is slower. I will size a little bit up. So I will sometimes be in with a double the amount of size that I'm normally in because there's like lack of movement at that point. All right, guys, I'm going to try... Why is this connected all of a sudden? So I want full copper on here. Now, this is a little slow. So I don't think we're even going to need to use a 2-minute chart, really. Let's just use a 5-minute chart instead. Now, I want to see some buyers consistently hanging above this. We technically didn't hit value high just yet. Okay, technically we didn't hit it. And remember, this is hypo 1. We are assuming that the uptrend is still in force because 5-0's got defended. That's not to say that we might not go into hypo 2, which would be hanging below the initial balance and then accepting value and rotating all the way back down to GEX 1, GEX 2, ADR low. But for now, let's just see what happens in the 5-minute chart. So this is a slower way of doing it. So you have a level in mind, then you look for a reversal pattern on a 5 or 15-minute time frame. I actually sometimes wait for 30 minutes as well. It depends on how long I'm planning for a swing to be. If I'm planning it to hold it for like 3 hours, then 30 minutes entry is okay. But if I'm going to hold it for an hour, I will usually enter either from 5 or 15. So no, wrecked, I wouldn't say that I trade. That's actually one of my criticisms by people. It's like, dude, why don't you trade with size? I trade with size when the account size calls for it, not before, right? And you know, if I'm trading our bigger accounts on, you know, corporate side, those are some sizes that will, you know, that it's a massive size. So I mean massive for retail because we're still retail. I'm only a small company, right? But it will still be between 40 and 80 lots sometimes, right? Depends on what size stop losses we're using. But for prop accounts, you know, I really dislike showing that because I have shown it before on my daily live streams. I have traded bigger. If you go back to like 2022, you will see me plop in like 40 lots on crude oil and stuff. But then once the COVID volatility started falling off, I started having problems entering those trades. Because, you know, I would try and enter it, would be like, computer says no. So I would be sitting there, you know, messing around with positions. I would be going 5 and 10. It just became a pain in the ass, to be honest. So I decided to draw some money down and to go back to trading with, like, you know, between 2 and 5. And I'm still there. I haven't haven't changed on that particular account. Now, obviously, if we're doing more swing type positions, they will be the larger ones these days. However, I used to be crazier in my younger days. And now that I think about it, I'm like, what the hell was I doing? So, for example, I would be always starting my combine back in the day with three minis on crude oil. And that was like my default size. Now, having micros, I mean, I wouldn't even dream of starting like, 150K with more than like one mini. And even that would be like too big, right? So my risk appetite has changed the longer I've done this. And I suppose I got more defensive as the years went on. And I don't know, I guess it's something that happens when you age, right? You get a little bit more risk averse. Stop Hunter says, hi Dee, advice for holding trades longer when your emotions take over. Size down. But also have a look at the quality of your trade locations. If the quality of your trade locations is no good, you won't be able to... Crichton, can you please be quiet? You won't be able to... I'm going to have to get him out of the room. So give me a second. Mouthy Crichton. That's what he does. Yes. Rah, rah, rah. Just like the real Crichton. So the first step to holding trades longer is your trade location. If your trade location sucks, it doesn't matter how good your emotions are. It's just that your trade location is just not strong enough to handle a move of, 200 ticks, for example. That would be maybe one problem. I don't know exactly what you're dealing with, so I would need to dive a little bit deeper or a lot deeper into it. But if it's just the sheer emotional control where it's in profit and you're like, oh my God, oh my God, oh my God, have a look at your MFE, right? And then also track what happens after you get out of a trade. So if your MFE is saying, so maximum favorable excursion, through a mouthful, say that 10 times fast. If you, for example, notice that you're in profit like 60 ticks on average, but your journal says that like 70% of your trades would have gone to 120 ticks, that means you are not holding trades long enough and they have more juice in them. Now, I personally use machine learning for this purpose. We actually train our algorithms to show us what combination of stop loss and take profit can be done most frequently in the set of parameters that we've set for, stop loss size, targets, etc., trade location. And in that regard, we're still making lower lows. So maybe this would be a value acceptance. I'm going to try and front run that. So let's go. Oh, this is gold. Shit. Why am I on gold? Like, what is going on today? Like, all of my things have just gone a bit weird. I am going to put a little bit of a wider stop loss just to give it room. So aiming for value acceptance, we're still making lower lows. Yes, we could bounce from here, but extension of the downside. I know that I said I'm bullish, but like I said, the most ideal situation here would be that we go down to 5 evens and then D snipes a very big trade from there. Maybe not today, but tomorrow and whatever. So trade location is one thing. Emotions, whilst in a trade, need to be done via data. So like I said, I do it via machine learning, where I basically look at how frequently a certain combination of a stop loss size and target would get reached. And then in addition to that, I will also be looking at my own MFE. Now, I don't have a problem with holding trades. In fact, if you've ever attended Coach Hoop's class, he will tell you, Dee, you're somebody that holds trades longer than anyone else I know. So I'm known by that. I'm known by my emotional resilience, but it's not emotional resilience. It's more to do with trade location, confidence that I've seen that thing happen over and over, and then just not freaking out when I'm in a trade. Just not freaking out. I'm just like, I go find something else to do. Okay, I need this to stay below the initial balance. I'm going to put another line here, but I'm going to change it to yellow. This is a part of my OODA loops, or DA loops, whilst I'm entering trades. Now, I know that my trades on average experience about 18 to 22 ticks of drawdown. And sometimes if I'm pretty confident that the trade will work out, I might use that point to size in. Right now, I want to see what happens at VWAP, so I'm not going to be doing that just yet. So there's definitely, and there's buyers stepping in. So right now, it's sort of one of those decision points, right? They're either going to capitulate and we're going to go into value below VWAP with some volume, or we're going to reverse and then stay exactly where the high is right now. So that would be like the top. What I'm trying to say, it would be a rotation, failed auction, and a rotation to the upside. But for now, we've gone below VWAP. Volume is not that great, so we didn't really manage to average higher volume. But again, it's still early days, and we're about to come into the overlap, so that will improve. So two things that happens in the overlap, ranges can get bigger. We can get candles that are a little bit shaky-outy. So this could be liquidity grab, but this could also be the start of a turnaround that might last all the way into COMEX. So this is like a decision point here. Once we get into COMEX, ASR low for London is no longer valid. So you can like erase that. And then look for some other confluences like this GX3, GX1, and see whether we can get a trade out of it. Okay, so some selling here. Let's see what that looks like on a 2-minute chart. Right, initial bounce low. We need a nice Mariposa candle here to the downside because we hit the initial bounce low. So we went extended, hit the initial bounce low, and now we have some evidence on a very low time frame, so nothing is done yet, that we might be rejecting initial bounce low. But we still need some buyers, some sellers to step in here for this to be valid. Let's go with some more questions. So yeah, holding trades longer, for me, it's confidence in what I'm seeing. It's data driven. And then it's just letting it do whatever it's going to do. So not over managing. You will notice that I don't like moving stops. So I won't be messing with stops going, oh, closer, further out, closer. I have, like every single time that you see me trade, I will be going in and saying, I'm using a X amount of stop here, 35 ticks. Right? So you have to find that confidence in yourself. How you get there, I'm not sure, because I get there via data. Are you okay with analytics and data and all that? If yes, then you will have no problem implementing that. So to me, the more I rely on numbers, the better my results get and the less emotions I have, if that makes sense. Tushar wants to know, do you use a formula for calculating where stops are going to be? Yes, so I've just spoken a little bit about this. I use my own formula. So I don't necessarily like to use ATR because ATR only looks at the current session and the few previous candles. So if I'm, for example, trading London, what's going to happen is that we catch Asia and now I'm calculating my stops based on what's happened in and out of our session. I don't like that. So what I do, I have my own way of doing it using ASR. So it's a proprietary thing, so I'm not going to be uncovering that. Rex says, are all your pups little dogs? In effect, yes, but two of them came out bigger than they should be. So I have Bernard and Rimmer. They're almost medium size. They're more like kind of border collie size or like small Labrador, because they, for some reason, picked up something called a throwback gene from their mom, who is a throwback Pomeranian. She's a bigger Pomeranian, but she's still little. And then these two monsters came out, and one of them is like literally this big. He's tall, he's got big legs. The other one is also big, quite stocky, with a wide mouth. I'm like, what is this, man? And, Pomeranians should be, like up to 10 pounds or something. I'm trying to think of pounds. Like Lisbon, my Pomeranian, the mom, she's about 14 pounds. So that's still bigger. And then these guys are nearly 30 pounds. And they're like lean 30-pound of dog. It's like Cavalier Pomer, like, and when they ask us, oh, what are they? And this like huge stocky thing comes over, and I said, oh, he's a Cavalier Pomeranian. And they're like, did you say Pomeranian? And I'm like, I know, he's big. So yes, kind of, yeah. Smeghead, that's right. I see we have some UK people in here. That's great. Oh, God. What kind of MA am I using for my ribbon? So it's all 9 EMAs, but anchored to high, low, and then the normal one, which is close. So it's like the same thing, but I anchor it to not cross over, because I want to show the trend, like unequivocal, because we're in such low time frames that you really need to be sure that they're actually moving away from it. And it's contextual. So if you have a range date, this is completely useless. Or if you get stuck in a lunchtime hour range, all that it's going to be doing is chopping in between the lines. So do not use this if you're aiming for a range trade. But if you're looking for a trending move or a reversal, it's a very good tool, right? It's a very good tool. And it's kind of like, again, one of those my invention things where Muhammad was using his ribbon, but he uses it in a different way. He uses it almost like a level. I don't use it as a level. I call it my timing tool. So, yeah, a bit different. All right, we're coming on time, so I'm going to try and go through all these questions very quickly. Oh, my God, guys. You've, like, wallpapered me with questions. Would you go through each one? We run out of time. I will, Edward. Remind me tomorrow. Rect says, what does DRF mean? It's my abbreviation. So I work on day trading time zones. And for each time zone, I have a specific anticipation, statistically, what has happened on a large number of occasions. It stands for day range fill. But it doesn't mean that you're always going to fill the range. There's more to it. It's from my methodology, right? So I've got PNYC and DRF. Please expand on the VWAP percentage. I just want the VWAP percentage to be far enough away, but not too far, because too far is a trend. Far enough away is a mean reversion opportunity. Hopefully that helps. Do I have any socials that I can follow? Check them out right underneath this video. There's a YouTube channel, Market Stalker D, and there's also Pip_Raider, which is my Twitter. So I don't post much on Twitter, and to be honest, I've been a little bit quiet on my YouTube channel as well, even though I try to do like a video every so often. I will get better, I promise. We're moving house. The reason why I couldn't sleep last night is because we got some excellent news that we're basically about to complete the exchange. So within a week, I'm probably going to be in the new house. So it was very exciting, and I was just like, it's been like a long time coming. I've been trying to sell this house for like 6 months, and 3 months ago we actually sold it, but then it's just the whole bureaucracy and the nightmare of paperwork that we have in this country is just beyond bonkers. So yeah, finally happened. So I'm not super active at the moment, but I do plan to restart everything once I'm a little bit more settled. So yeah, but check out those 2 links down below. You will definitely find me over there. My YouTube channel has a ton of videos. I've actually been on YouTube for many years, so you can go and rewatch all those. I tackle different things like market profile, volume profile versus TPO profile, poor lows, poor highs, how to avoid burnout, a whole bunch of stuff. So again, this ties into the next question by TechTick. Check out my YouTube channel. Loads and loads of useful videos there. Siwa, I've answered that one already. What opening hours are you using for initial balance in copper and gold? For London, I use the London 8 a.m. till 9 a.m. That is the initial balance. I start these streams is precisely because I want to see this extension. Sometimes it tends to happen earlier, and those are my setups. So, value acceptance based on popping below the initial balance. Obviously, GEX4 is just an orientation point at this point. And then you basically look for a continuation of that move. But yeah, so if we're talking COMEX, then it used to be like 1:20 p.m. over here, but no platform, like very few platforms will allow you to start a candle at 20 past. So it's sort of like half past, so 1:30 p.m. UK time is when COMEX officially opens. However, a lot of the times the volume that comes in won't actually come in until the New York Stock Exchange opens an hour later. So just some intricacies there. But it's still useful. I still like to, watch it and wait. All right, we're finally making a movement. You see, this is why I don't trade before 11. Like we sit and watch effing paint dry for 2 hours, and then it's like, oh yeah, let's trade copper. It's like, good morning, somebody had a cup of coffee. Just looking at the high Kanashi candles, they seem like they make a lot of sense. I gotta try trading with them. Yeah, so just make sure that you understand what they are. They're like smoothed out price movement, so don't try and base stops on the highs and lows of the high Kanashi. That ain't working. Why are you not considering range extension? Who said I'm not? I have 2 hypos, 3 hypos. Joe, I always have about 3 or 4 hypos on the day to account for both longs and shorts, depending on how we're behaving in in and around the initial balance. I make my decision. Yeah? That is funny. Christ, your dog gave me a heart attack. I do apologize. He's very screamy. Gave me one as well many times. I feel you. But yeah, I'm out on my porch. Do you know what? He does that when I'm sleeping, right? So in the morning, I'm thinking it's all very nice, and then he hears a squirrel and goes, bah! I'm like, who needs the alarm when you go Crichton, right? TTBZ says, just got in. So the London, what's the biggest stop you ever need as in tick size? The stop size would be determined by the volatility of the product at the time, right? So usually if I look at all of the years that I've traded, most times I will settle at about 35 ticks for things like crude oil, gold, copper, platinum. But this will change at times when VIX and its own respective volatility indexes for the product in question are higher or lower. But on average, let's say 30 to 50 ticks would be something I do. All right, that is it, guys. We answered all the questions. Yay. Bruno, thank you. If you are hanging later for the main broadcast and you want to join us at some point, maybe fill out this casting call. Now, we also have Discord in case you're missing us and you cannot live without us. Check out Topstep Discord. It's just knocked me out again. What is the matter with Google? Seriously, every time I try to do links, it doesn't kick me out. Then as soon as I start doing something, they're like, you need to re-verify. So I'm actually going to try and do the Discord manually. Lovely. Discord GG Topstep. Okay. There we go. I think that's it. In the meantime, let's see what the NFP week brings, because we have NFP this Friday. Thank you so much for hanging with me. Amazing questions. I love you all. It's absolutely wonderful to see some, intelligence, effort and skill development, and, thought through questions rather than just, I'm going to fade you. So thank you so much for being the beacon of light in the industry so full of toxicity and, malignant opinions and wishes. I think the London session has the best ever audience on YouTube. You are very kind, you're very intelligent. Like I said, all the questions that come my way are always very deep and very meaningful. So thank you so much. Let's continue to hang together into Wednesday. And trade well, size down, slow down. I will keep repeating that until the day I die, to be like a little bit grim. Enjoy the rest of the main broadcast. I will see you again probably for I don't think I have anything on today. No. Yeah. So I will see you on the London session again tomorrow. I'm Marcus Stalker Dee. This has been London session on TopstepTV. Have a good rest of your day. Thank you.